Thank you to everyone for joining us tonight. My name is Marcia Zappa, and I'm the Director of Marketing and Business Development at Affiance Financial. I'll be moderating today's conference call. I want to start out by clarifying that this is a call, not a presentation. There are no visuals, so if you are joining by phone, you aren't missing anything. Due to the number of people on this call, all participants have been muted, but if you have questions and are joining by computer, please use Zoom's Q&A function to submit those. I will be monitoring it during the discussion and will do my best to facilitate live answers to your questions. If we are unable to answer your questions during the call, we will try our best to follow up with you, but please do not hesitate to reach out to your advisor. Today we have Principal and Financial Planner Andy Fishman, Principal and Financial Planner Steve Lear, Principal and Chief Investment Officer Seth Meisler on the call with us today. Andy, would you please get us started?
Yes, thank you, Marcia. Well, I hope everyone is well, and we want to extend our thoughts for health and well-being to everyone. We know this is a difficult time for everyone. First off, I want to start out by apologizing for any confusion or fear from our last email about our remote office. This might have caused some of you. All of our recent emails have been an attempt to clear up confusion and alleviate fear. So we sincerely regret that this latest email failed to do so. Therefore, I want to reiterate right now what we're trying to communicate in the email. Your portfolios are being monitored. Your advisor is available, and Affiance Financial is not in danger of closing, and in fact, we're very healthy. Again, I'm sorry if the wording of the email caused any confusion or distress. We have decided to move to remote-only office environment, something that we have never done before. We've had the technology in place to be able to work remotely for some time, but now we are actually implementing this in a more robust way. And already I can see the improvement. Our staff and advisors, even the gray-haired ones, are getting the hang of it very quickly. And I anticipate that we will adjust to this new normal fairly quickly. One thing you may be wondering about as we've gone to remote office environment is what happens to checks that people want to deposit. We have a plan in place to continue to process physical checks sent to our office. But this might be a good time for everyone to set up their electronic transfer or an ACH link to the bank account. If that is something that you're interested in setting up, please reach out to your individual advisor and they can help you. Today, we're here to talk about what we know and what we don't with regards to the coronavirus effects on the markets and the economy. We anticipate going forward and what we have done and what we'll be doing in response. As many of you are undoubtedly aware, this past week of global markets have seen both a level of volatility and speed of decline that we've seldom observed in modern financial history. Given both the enormous uncertainty that, in our view, will continue to persist in markets regarding the COVID-19 for weeks, if not longer, will require patience, discipline, and conversations. The recovery will happen. Let me close before I hand it off to Seth. Stock market, this is a quote from Warren Buffett. Stock market is a device to transfer money from the impatient to the patient. Since 1900, there have been 33 market declines of at least 20%. 32 of those scenarios have met with market recoveries that have gone to all-time highs. We want to provide as much information as we can, and I'm going to turn it over to Seth for a narrative on the markets and some of the government and Federal Reserve actions that are taking place right now. Seth, can you please provide your input?
Yeah, thank you very much, Andy. First, I do want to express our thoughts with any people who have been affected by COVID-19. We're certainly concerned about the human impact and of what's happening to everybody. As you know, our commentary is pretty straightforward, and we give you what we see, both the good and the bad. And we know that things look pretty challenging right now. And frankly, our belief is that things are going to get worse, at least in the short term. And what we mean is that infections are going to continue to rise, and the practice of social distancing and closing of restaurants and events and activities is going to continue. Our best guess, and this is really more of a guess just from the data that we have now, but it's changing quite rapidly, is that this shutdown will continue through at least July. Again, we don't know for sure because obviously there's a lot of factors at play. That being said, I think it pales in comparison to what some of us or parents or grandparents or maybe even great-grandparents experienced in the past. Events such as World War II, the Great Depression, the Spanish flu. And what's important to keep in mind is that in all these cases, after these events, when we were at the other side of these events, the economy experienced robust economic growth, both the economy and frankly the stock market. And I would expect no difference in this case as well. There will be another side to this. We will get through, and when we are through, I'm pretty confident that consumers will want to spend, that vacations that have been sidelined will want to be taken. It's really easy right now to take the current experience of the last week and forecast that it's going to continue ad infinitum, that it will continue forever. And that's simply not the case. We know that this will end. And we have to be really cautious with kind of taking the current experience that we're feeling, and we're all feeling it, you know, myself as well, and projecting that out into the future. The stock market tends to be somewhat of a leading indicator, but I say somewhat because we have to be careful. The coronavirus was identified back in January, yet the stock market continued to go up until mid-February. And it was only after individuals were identified in the US by, I don't know, a week or two that the stock market started reacting. And then it reacted very quickly, expecting what the next several months or longer was going to look like. What that means is that, and while the decline has been very fast and very sharp, that also means that the stock market is likely to rise prior to us knowing that the coast is clear. And so, and you saw that today as well, where the S&P 500 today was up 6% after the day before is Monday's big drop. And so we have to be really careful about our natural desire to exit the market and get out of the market, because it's going to be very, very hard to get back in, and none of us know when the stock market is going to get back in. And it's very easy to miss those sharp rises as we're trying to miss those sharp drops. Our experience is that people who've made those changes, who did that back in 2009, who exited the market, and some took years to get back in, they decimated their portfolio. They missed the recovery. And so we want you to be cautious about trying to make a move like that. Generally, our experience is that those who stayed invested did better. As difficult as this is, and I assure you it's going to get much more difficult, we're strongly urging you to stay the course. Success in investing is time in the market and not market timing. I'll give you another Warren Buffett quote to follow up Andy. Warren Buffett says he likes his stocks the way he likes his socks, on sale. And we think that now is a good entry point in terms of valuation in the market for long-term investors. We want you to be prepared to buy at what we think are better prices, buying companies that we think are worth more than what they're currently selling for. And with that, I'm going to turn it over to Steve.
Gentlemen, I miss you. You know, it's only been one day and I haven't seen your face, and it's just not the same kind of day. You too, Marcia. To wrap this thing up, I want to approach it in a couple of ways. One is listening to both of you, especially listening to Seth and the stories. This era of certainty of uncertainty continues to persist, and it's always been there. It's just more prominent now than it has been in the past. And I think that all of us, clients of Affiance Financial need to recognize that. What does that lead to? That leads to a very important ingredient, which is please talk to us. Please call your financial advisor if there's tremendous levels of concern and anxiety, if your goals seem to change. There's kind of a new revelation that I've had, and it comes back to why we're urging you to talk to your advisor. There's a whole group of people, a whole group of clients that we have that are in distribution phase, and they live off of their asset base. Then there's a whole bunch of clients that are accumulating money and they have earned income. Well, the concern that we are now having is that some of our earned income, so this doesn't necessarily apply to people who do not have earned income, it could be jeopardized. You could be in a situation where you may not be making as much money as you have in the past. So what does that mean? We're asking you to please be planful. Please talk to us. Please tell us what's going on, because I know every advisor of Affiance is paying so much attention to what your cash needs might be over the next year to 18 months. And the whole concept is to live through that time. That's the financial planning aspect. Seth covered the investments. I want to cover something a little bit more personal, if it's okay with everybody. Andy was referring to the gray hairs. Well, I'm the oldest one in the office. No, I'm not the oldest one. Lori's older than I am. But for those of you who do not know, I rolled off the leadership team in January of this year. And naturally, it was very challenging for me to let go of the vine, let go of being part of the everyday decision-making processes. But I gotta tell you, my net worth is tied into the valuation of Affiance. My investment strategies are exactly what Seth and Andy and the investment committee have been suggesting. And I feel really good, just great. I feel at ease that there is a group of individuals that have taken over the management, the day-to-day management of Affiance Financial, who are doing an outstanding job, in my opinion. We were able to get remote within about 2 days because of all the work that we had done earlier. So Eric, Andy, Seth, Marcia, anybody else on this call that's part of the Affiance team, I thank you so much for taking the responsibility so seriously. And to the clients of Affiance Financial, I can't tell you how proud I am of how these people have risen to a situation to take care of all of our needs. Back to you, Marcia.
All right, we do have one question here. Seth, this is from a client, do we have to tell you what opportunities to buy, or do we rely on you to make those decisions for us? This is for those of us who have retirement funds with a portion in stocks, not the traders among us.
So I would say that we are looking at the portfolios right now, really every day, and we are making changes when we think it is appropriate. The investments that we're doing are in exchange traded funds and mutual funds. We're not doing, I think the question said individual stocks, I'm not sure. So individual stocks would need to be a separate conversation. But with regards to exchange traded funds and mutual funds, et cetera, for our clients, we're actively looking at that and making changes as we feel is appropriate. Marcia, can I add one thing that I missed
Sure.
when we were talking? So Andy had talked about items that both the IRS and the Federal Reserve are doing. And so a couple things. The IRS announced today that there will be a 90-day reprieve on payments of tax as well as interest and penalties that's due April 15th. Tax returns are still due on April 15th, but payments have now been extended. As well as the Federal Reserve has launched both what's called a primary dealer credit facility and a commercial paper funding facility, so that banks as well as large corporations have access to cash. As well as the administration is trying to put together a plan to send checks directly to individuals in order to ease the strain, the financial strain of the current shutdown.
Marcia, let me try to answer or piggyback a little bit on Seth for that person's question, if that's okay.
Of course.
So the question, I believe, was how do we know when there's opportunities, or when will the opportunities present themselves, and what will we buy? The fact of the matter is what we have a disciplined approach to investments. We have a process, and we will rebalance when we've determined that the levels meet the criteria that we've set, which is typically 5% or more. And in all honesty, to whoever asked that question, it's a good way. It doesn't matter. At this point, all stocks are down. But what we would do is we would add to the equity positions that we already have in our portfolio. We're very comfortable with what we have in the portfolio already. Doesn't mean it didn't go down, because we know it did. But at this point, we would just add to those existing equities. And so as we review the portfolios on a regular basis, be prepared, everyone, that we may rebalance, and we've already done that. You all have seen trades come through. That was part of a rebalancing and buying stocks when they are down. It's hard. It's very hard, but we're going to take a disciplined approach to how we're staying focused in managing the portfolios.
Fantastic. Thank you, Andy. I have a comment here that says that you hit the nail on the head as far as answering that question. So thank you very much, Andy. Here is another question, Seth. Is it possible to give an overview of how the average Affiance portfolio has fared to date versus the market overall?
Unfortunately, we're not able to do so because of the variation in individual circumstances. That being said, all of everyone's return information is available on our client portal. So you can see exactly what we're seeing with regards to performance.
Which segues perfectly into our next question. Andy, this might be a good one for you. How often should clients be checking the portfolios?
I guess people can check them, suppose, as often as they want, but recognize and be clear and transparent to yourself when you look in the mirror that returns are going to be down. The performance year to date is off. I would be cautious to how frequently someone is looking, but I don't want to sit here and prevent anybody or make a statement to not allow people to look at it. But as you look at investments, and we've already, all three of us have made reference to this, that this is a long-term game. This is something that shouldn't be looked at on 1 month, 1 week, 1 day, and that the approach to investing is longer term. So just be careful on how often you look at it, and if it drives you crazy, don't look at it.
I think one other thing I do want to add is that the data on the client portal is always going to be a day behind. So markets being up 6% today, that will not be in the client portal, the returns, until tomorrow morning, somewhere around 8:30 in the morning or so.
Okay, thanks, Seth. I have another question for you here. Do you think the U.S. or world economy could collapse? And if so, what would that look like?
So my personal opinion is no, I don't think so. In fact, let me just state first that I'd say when things are going well, that's kind of when I get a little bit glum. And when things are looking bad, that's when I get a little bit excited. And the reason is because, typical with an investment person, when are the opportunities? When things are great, opportunities don't look so exciting. And today the opportunities look much better than they did a month ago. So I really think that again, this is my personal opinion, I think the third or fourth quarter of this year is going to be a much more robust expansion than anyone is expecting right now. That's my personal opinion. Do I think there's going to be winners or losers? Yeah, for sure. You already saw, I think this was either today or yesterday, the airlines went to the US government asking for a bailout. And so we're certainly going to see that. We're certainly going to see businesses shutter their doors. That's already happening. But I think economically for the entire country, I think 2020 is actually going to be going to surprise people on the upside, not on the down.
You are so optimistic.
I know.
Let me just, everybody's definition of the world collapsing can vary. That's probably what people thought in 08, 09, and that was felt like a lifetime, but it was a year and a half on the downside, and then it took maybe 3.5 years to recover. So when somebody says, is the world collapsing, it's hard to understand what that person's definition might be. Are certain sectors going to be stressed? Leisure, hospitality, absolutely. But as soon as the coronavirus gets contained or there's a vaccine, and it will happen, you're going to see that turn around. But in the meantime, the government probably will step in and provide some bailouts to certain industries like the airlines industry. So it's hard to know what a definition of collapse means to everyone.
I'd like to add to the answer to this question, but do it in a little bit of a different way, which is in the more financial planning and the income levels. Before an economy would collapse, unemployment rates would go up dramatically. Again, for those of you who are older on this call, please, and if you're not making earned income, turn to your children, turn to the younger people that you know, and tell them, please, that this is probably going to be one of the best opportunities they may have in their lives to shine. What will occur is the cream of the crop the cream will rise. The great workers, the great people who deliver value will rise to the top. And what will happen is when this comes back, which Seth is making his comments, I'm hoping he's right. I don't know if it's going to be the third or fourth quarter, but I know he's right. I just don't know when. But the struggle that we've seen is when older people have to support younger people or vice versa. And this kind of needs to tie in. And one of those things that we older people can say to the younger people, this is your time to shine. Do the best job that you can do in the work that you're doing. So I just bring that up as just another way of dealing with this chaos that we're dealing with. is people need to know they can shine.
Okay, thanks, Steve. I do have a couple more questions we'll try to get through without making this call too long. Seth, people are wondering, are we invested in companies that might go away as a result of the recession?
No, keep in mind you are invested in very broad-based mutual funds that have a significant number of holdings. So while certainly there could be a risk within any of the holdings, but it is so diversified that it will not have any one company will not have a significant material impact to your portfolio.
Great.
Okay, and Andy, does it make sense to postpone a major purchase in light of what's going on right now, such as an extensive home renovation?
Well, maybe, and that certainly is an individual question. So I'm happy, or we as advisors would be happy to answer that on an individual basis, looking at all the components of anybody's situation. But
Okay.
interest rates are low. It's still, the timing could be right, but that's probably a question that should be answered individually, looking at the entire situation of that person.
Okay, great. Thank you, Andy. And one more question here. I've actually gotten a couple of them that are kind of similar, so I'm just going to wrap it up with this one version of it. And Seth, clients are wondering, should I get out now before things get worse, or just hang in for the duration of this period of global recession?
Yeah, so I think that the bottom line is I think you should hang in there. Well, I do think things are going to get worse both in the stock market and in the economy in the short run. So I think you should mentally prepare yourself. How much, I don't know. I mean, my personal guess could be another 10-20% on the down. But again, that's a little bit of an estimate. The hazard is that you're going to miss the up, and the up is going to be just as powerful and just as fast as the down, and you will miss it, and I'm sure you will miss it. So personally, I'm not making any changes. I'm hanging in there, and with the idea that if it does drop some more, that we would, as a firm, we would be making changes to the portfolio, reallocating if you're out of balance, and buying at another significant dip in the market.
I'm in agreement.
Okay, thanks, Steve. Thanks, Seth. All right, and with that, I think we will wrap it up. Again, thank you all for being here tonight and for listening in. I hope we provided some useful information, and we certainly encourage you to reach out to your advisor to discuss your personal situation.
Marcia, can I ask you a question?
Sure, Steve.
What's the strategy of doing these going forward? Is this a weekly activity? What are you thinking?
That is an excellent point, Steve. We do intend to continue with these weekly until people are no longer interested. I heard belatedly that we actually filled our entire webinar today, and some people were turned away. So this will be shared, the recording will be shared on the blog for anyone who wasn't able to participate, and we will be holding these weekly until the interest is no longer there. So.
Are you thinking we're doing these on Tuesday nights, or is that going to vary depending on schedules?
We will hopefully be able to collect some information about that in the next week to try to determine what works best for people. My original strategy is to mix it up to be able to get as many different people on the call as possible.
I see. So the party animals on Tuesday will have to consider another time.
They can't go out anyhow.
Yeah, really.
Yes, we're filling the void with valuable entertainment here.
Been one day and my wife is gone, so it's like, come on.
Oh boy. All right. Well, thank you so much, everyone. Take care.
Bye-bye.
I thank you.
Thank you, everyone.
Thanks.